Hello, good morning, and welcome to New Hampshire Business Review's webinar, Navigating the Stimulus, What's in This for My Business. I'm Ernesto Burden. I'm the publisher of New Hampshire Business Review and New Hampshire Magazine, McLean Communications, and we are very grateful to you for joining us this morning for this vital discussion on what is an incredibly important issue in an incredibly challenging time. Our New Hampshire business community is a resilient community and it's very supportive. And we think that our presenters today are great representatives of both that resilience and that supportiveness. So we are deeply grateful for their expertise and generosity with their time this morning. We're also deeply grateful to our sponsor, Tufts Health Freedom Plan and Northeast Delta Dental. And with that, I am going to leave you to what you came here for, which is this great discussion. I want to introduce Jeff Feingold. He's the editor of New Hampshire Business Review, and he will be moderating this conversation. And so, and I will be signing off and listening along with the rest of you to the experts. So, Jeff, take it away.
Great. Thanks so much, Ernesto. I just want to say thank you also to the sponsors, to Tufts and to Delta Dental. This is really an essential conversation we're having today because there's so much interest in this and actually, honestly, some concerns and a lot of confusion. So we have three great panelists who could just kind of help us navigate through this stuff. The first one we have is Rusty Mosca, who is the managing director of Concord-based regional accounting firm Nathan Wexler & Company. He has significant audit experience in a variety of industries with a concentration in the construction industry and with nonprofit entities. Joe Bader is executive vice president and senior lender at Bedford-based Primary Bank, where he is second in command and responsible for all lending and commercial banking functions of the bank. Before that, he was senior vice president and director of business banking at Eastern Bank, overseeing its portfolio of business clients with revenue up to $10 million and lending needs up to $3 million. He also oversaw that bank's SBA program, which is essential for this conversation, obviously. Then we have Mark Bowden, a partner with Nixon Peabody. He's based in Manchester. He represents business and energy clients in all aspects of commercial real estate transactions, including finance and leasing. So anyway, before we begin, I wanted to put up a poll to ask our attendees, our audience today. We're going to do two polls, and this will be the first one. And I think Ernesto is going to put it up and just kind of ask you in general, have you so far tried to apply for assistance under the CARES Act? And we'll give you a few seconds to answer that, and we'll give us an idea of how things are going that way. But anyway, while you're answering the question, I'm going to ask our panelists to start off just to give us their general views, their perspectives on how this has been working. Especially the Paycheck Protection Program, which is the PPP, and the emergency loan, EIDL program through the SBA. How do you think this is working right now? And Joe, considering you're down in the trenches now at the bank, could you talk to what your experience is?
Yeah, sure, happy to. Thanks, Jeff. It's a little bit of the Wild West. We've been out with our clients and trying to get guidance from the SBA, and it's a bit of a moving target. But with that said, we're making our best guesses, and the SBA has said that they aren't going to hold us accountable as long as we're trying to make reasonable decisions to help these clients and get money out the door as soon as possible. I've been working with the SBA for many years, and I remember back in the last financial crisis of 2008 and 2009, it took the SBA a long time to get out what was known as their ARC program. The people who've been around a while might remember that, and it didn't really do what they had intended to. So I think they've learned a lot of lessons from that program, and they're trying to do things differently this time and get money out as soon as possible. And those of us who've spent a lot of time with the SBA are able to navigate it a little bit better because we know some of the quirkiness that comes in, and so we've been able to have our clients up and running on some of those behind the scenes things that are in the minutia of the act. And it's been extremely busy. We've approved over 250 loans, over $70 million for our clients and our businesses in New Hampshire to make sure that they're able to continue on.
Thanks very much. Rusty, how about from your perspective as an accountant?
Thanks, Jeff. It's been very interesting. The way I kind of look at it, up until about a month ago, What we're more worried about was making sure our clients got their tax returns done in a way that helped minimize their tax burden. All of a sudden, we get thrown into a situation where really the next question that we hear from our clients is, how do you help us put a cash flow projection together because of what's going on, and how does that impact my business? To following it up with this very complicated but yet speedy CARES Act bill that went through, and from there going to now, how do we take advantage of these different programs? And we're really talking in a lot of ways about a 2.5 week period of time that a lot of moving parts continue to be changing on an hourly basis. I'm sure when we get off of this webinar, there'll be other information about how the programs work. And for us, it's been very interesting because as we talked about earlier, and I think Joe hit it on the head, man, that it is the wild, wild west. But in the same vein, everybody's kind of taking this information. We in our own firm have been studying it and trying to apply it, creating a calculator to help our clients and others. It's on our website to help them navigate through the process of what program makes sense for you, how does it work, and what are the things you need to be thinking about in that measurement period. And I'm sure we're going to talk about it, but generally speaking, it has been crazy times here for an accountant.
Yeah, I imagine, Mark, it's not that simple for you guys either over there.
Oh, thanks, Jeff. I really appreciate the opportunity. Since President Trump enacted this into law on March 27th, and prior to that, we've been trying to predict exactly what we think clients should be assembling or putting together in order to be first in line for the various programs. And it seems like almost daily, like Rusty said, things change a bit or things are further refined, whether it's further defining the affiliation rule or further giving some guidance on how to calculate payroll costs. And those things really matter when the borrower is certifying that the application they're filing is truthful and there are some penalties involved there. So as an attorney, all we're trying to do is make lives easier for our business clients. And that's the way we do that, is provide clear guidance. And it's been difficult to do that. And it's been a 24/7 type responsibility to keep up to date on what's going on. Just this morning, we found out that it's very likely there's going to be an expansion of the monies available for the PPP, up to $250 billion. And some of that may be earmarked for women and minority-owned businesses. It may not. But so we're just trying to keep ahead of the curve and allow borrowers to be able to get in line for Joe as quickly as possible. Great.
Listen, actually, we have some slides showing some of the details of the PPP, so maybe we can put those up as we're talking. But I want to go with the first question. We received this by email earlier yesterday. Someone who apparently had applied, what is the status of processing applications for SBA COVID-19 related loans? We applied, but have not even got a response that the application was received by the SBA. Now, what is that person actually talking about in terms, because I know at Primary says he's responded you've responded to loan requests. What exactly does that mean? Do you know, Joe, or anybody else on the panel?
Yeah, I'd be happy to take a shot at that. There's two programs. There is the EIDC, which is the Economic Injury Disaster program. That program you apply directly to the SBA. And that one, from all we've heard, anyone who's applied for that program, no one has heard back yet. None of my clients have heard back relative to that program, which would be my guess, other than they know it's been uploaded. The PPP program, you apply through your banks apply to the SBA, and the SBA gives them back what's called an authorization number. That number is sort of the important thing. Banks that are preferred SBA lenders get those back, and that number comes back momentarily, or near momentarily, after you submit all the information into the SBA.
Okay, great.
And if I can add commentary to it as well, Jeff, I think what's important for people that have not yet put it all together is to go to the treasury.gov site. It has a great section right on the top that will put you through to all the different components of items to understand. The two that I really want to make sure people understand is the interim. Now listen to me, the interim final rule put out by the SBA, because that is a pretty layman's term document that will help navigate you through some of the just generally to kind of get you up to speed on how the program's going to work. And what I'm really talking about is the Paychex Protection Program, which we see and what our clients are trying to utilize as probably the best option for businesses, because as you know, there's a forgiveness element to that loan, and the beauty of that is trying to go through the analysis to see how much money you can borrow, and then in the 8-week period of time, and I know we'll talk about this further, how do you get the forgiveness? So that's a great site to do that. But the interim final rule, and there's also this frequently asked questions that they update, and now they've updated it through yesterday, April 8th. And one of the important parts of what they updated it yesterday, and I'm going to read this to you because I think it's important when people who have already applied understand what they're looking for is what is that 8-week period of time for the forgiveness. And the way it's laid out in the question and answer part of it is that first off, the lender must make the first disbursement of the loan no later than 10 calendar days from the date of loan approval. And this is important for organizations to know how soon they'll get the money. And as soon as you get that first disbursement, that starts the trigger date. And Joe, correct me if I'm wrong, that starts the trigger date of that 8-week period of time to determine the cost and the forgiveness. Or Mark, you guys both can comment on that. But I think that's important information for people that have already applied of how those costs and when that money becomes part of that 8-week window for the forgiveness.
Sure, I'm happy to jump in. That is my understanding, though I will tell you that we have asked for clarification of that. Specifically, we have some clients that have said, hey, it might take us 2 weeks to hire our people back that we furloughed or laid off. If we start immediately and we have to fund within 10 days, so someone who got approved last Friday needs to be funded by next Monday, do their payroll have to start that way, or can there be a lag as long as it's all done before June 30th? We haven't gotten a clarification on that. Another one of those examples of, every day something changes. I think that's one that ultimately we're going to get some clarification on.
I think for those reasons, SBA has indicated that they're going to further tinker with their loan application documents, and there very well could be a new question proposing when the bank should fund. Maybe it's more of a flexible window than 10 days. Other things I've been fielding questions about are, assuming that you do use the monies for the right purposes, when and how do you apply for loan forgiveness? And in some of the notes I've been receiving and reviewing for clients from institutional banks, very large banks, they're saying that you must apply for loan forgiveness no less than 60 and no more than 90 days after being funded. So there's some other requirements once you actually get the money that you have to comply with. And to my knowledge, there's not much information available yet on what's the application for loan forgiveness will look like. Maybe Joe and Rusty can speak to that.
Actually, I will just real briefly, and I'll let Joe also respond, but I will tell you what I've heard, and this has been through a network of other CPAs I work with as managing partners throughout the country, that they have a signed document that right now with the bank they're working with and their client, where it's a 10-day window to supply that information, which is kind of ridiculous for what is there right now. So I'm assuming that what you both have been saying, and especially what you said, Joe, is they will have to have further guidance. And the other thing that I would just add to the equation is the way that the SBA has come out in that interim rule. I found this to be a fascinating last sentence on page 14. It says the SBA will issue additional guidance on loan forgiveness. So it sort of tells you, everybody's trying their best to get this program out there, but there's more information to follow. And, if Mark and Joe are available tomorrow, we could do this again tomorrow, and there'll be some new answers for everybody.
I'll give everybody attending this a lot of confidence right now. Thank you.
Yeah, there definitely will be. The one thing that we have heard is you cannot apply for forgiveness until 7 weeks after you start or your loan is funded. That's the earliest you can apply for forgiveness. Now, with all of that said, what we're currently hearing is that the Fed may buy back all of these loans because they're worried about liquidity in the banking business in general, which would make it all, take it away from the banks and the SBA and pull it all to the Fed in terms of the forgiveness piece of it. So certainly more to come.
Yeah. I just want to get some results of that poll we got where we asked people if they had applied or for one of the CARES programs, and 41% said they have applied and are waiting to hear. Another 16% said I have, but my application hasn't been accepted yet. I think there's a missing cutoff there. And 43% of the people watching us have not applied yet. And I guess they're here for more information. And I did get someone with a comment saying that they did apply to an EIDL and got the money on March 18th, which is very interesting. But I don't know about what that deadline means. But anyway, I'd like to go to a question that's related to this whole idea of forgiveness. It's from someone who runs a veterinary clinic, and they're called an essential business. They have to keep part of their staff on, even though their business is way down. And they want to know if a PPP loan would cover payroll for staff we've kept on, since the revenues are going to be dropping, even though we still have to be there. Would it also cover the cost of paying for leave if any staff we have on now end up having a COVID-related need to be out? That might make sense. Does the loan money cover salaried as well as hourly employees? And I guess that's a lot of questions, but does anyone there want to try any of them?
I can start unless somebody else wants to start, but I can tell you that the whole point of this payroll protection is to cover salaries for people that are being employed. And quite frankly, 75% for later on forgiveness of those costs must relate to compensation plus benefits related to health care coverage and any retirement benefits paid out. So that would absolutely cover those payroll costs. And hourly salary employees, total payroll, it really doesn't segregate in that vein. And I'll probably also say, and I might turn this over to Mark because I think it works well on the legal side. When you start going into the other things like the family and medical leave and the change in that, then you really start going into some complications, because now you're going to go into a different set of rules and a different bucket in terms of how the employer will be reimbursed for those costs for those people that are put onto the family medical leave. And if they are in that different bucket, whatever, if they're getting, if the employer is getting assistance through payroll tax credits, their payroll will not count to help get the forgiveness. In other words, you can't do both programs. And so I'll turn that over to Mark, because I think he could probably better explain it on the legal side of things.
Yeah, it's a complicated tax question where if you're getting a credit as referenced in another portion of the CARE Act, that portion would not be refundable as part of the PPP. And I'm not sure getting into the weeds of that, and plus I'm not really a tax attorney, I'm a real estate attorney, would be helpful. But I think it's important for all the viewers to know that the lion's share of payroll costs in almost every instance would be part of this program, including sick leave if the employer got sick because of COVID-19 or any other illness, including disability, including cash compensation, including benefits. That's the entire intent of it. And Jeff circulated the question earlier for us, so we had a little time to think about it. And I think in this instance too, there was a question about, well, what if, do we treat the employees differently who aren't in the office and those who are staying home, and ones who are staying home who can't work from home because their job doesn't require that? Can they still be part of the this program? And the answer is yes. Even if they're staying home and not theoretically doing their job, they can still be paid for the 8-week period. The goal of this program is to have those folks be an alternative to the unemployment insurance.
Yeah, that's exactly what I was going to say. I think that's probably the most important key to the program is bring back your bring your employees back on payroll, even if you're not bringing them back into the office as soon as possible.
Great, thanks very much. I have another one. It's kind of related to this. My business is an LLC, but as owners, we pay ourselves as independent contractors for our work. They're in the service industry. When we read the fine details on the PPP, it appears that it is for employees and overhead. We technically don't have W-2s. Can we still apply?
After the 10th, supposedly. If you don't have W-2 for now, you can't, correct. But we have gotten no guidance from the SBA yet as to what they're going to require to validate that information. I know Rusty and I were talking earlier about what could be required relative to, tax returns and, Schedule Cs and the like. But as of now, we have no guidance for those independent contractors.
But I think it's clear that they're going to be able to receive some loan money and later some forgiveness from it. But to Joe's point, I think the guidance that we're all looking for is pretty slim to none.
Right.
And I think on that question, really the issue is, who is the applicant? Is it the independent contractor, which are clearly allowed to apply for themselves, or is it their employer, which is the LLC? I think that's really the nuanced question, right, Joe? Is who is the applicant in that instance?
Right. We're assuming it's going to be the individual employee or independent contractor as opposed to the LLC.
Yeah,
but we don't know that for a fact.
I think the other thing, it depends on if it's an LLC where really there's just an LLC member, then it's clearly going to be the LLC member, and they're going to be the one who's going to apply as the LLC. Now, the issue is that we really probably don't need to get to, though. One of the means tests in this whole program is compensation, and compensation greater than $100,000 gets excluded from any loan calculation or forgiveness. So you just need to know some of the nuances when you look at the calculator to determine what is the pot that I can include in my average monthly payroll.
Cool. All right. Here's another one. Please distinguish whether part-time employees are eligible and how their compensation is calculated in the equation. It states full-time employees on the application.
So what I'm sorry.
Go ahead.
I was just going to say that everything that I've read, and when you go back to the CARES Act, they talk about determining what a full-time equivalent is, and they reference the Affordable Care Act. And in the Affordable Care Act, it's 120 hours a month is the determination of a full-time equivalent. So I think that's sort of what it reads, that you'll end up with a part-time person, number of hours may be a half equivalent, but it really does define a full-time equivalent at 120 hours a month, as far as I know. And I'm not sure, Joe or Mark, if you have any more information on how they're looking to that.
That's how we interpreted it as well, the full-time equivalent number. And we've been, advising people to do that. If they, say they have 2 20-hour-a-week part-time people, they can combine for one full-time.
I do know that, and because there's been so much guidance in the past 48 hours, I read that part-time employees are not excluded when you're calculating the maximum amount of your loan eligibility. But figuring out what that is complicated. You probably need to take the average of the average and then come up with the aggregate of your payroll for the previous 12-month period. But I know the intent there was to not exclude part-time employees from the program.
Yeah, and I think we'll probably hit this later on. I think what's also important to understand is not only does the money need to be spent on 75%, and I'm talking again about loan forgiveness down the road. You get your maximum loan. I think everybody who wants to be smart about this are going to keep people on, knowing that the production and the productivity of their organization is definitely not at 100% and can be low as 30%. And so the loan forgiveness, when you kind of look at the different characteristics of it, and that's why you really have to go through a calculator. And again, that's down the road, but you need to understand it a little bit before you go ahead and apply for the loan. that if you make it through the first bucket and you spend 75% on payroll related costs and 25% on the other items that they say in there, including utilities and rent and mortgage interest and interest on personal property, a couple of other things. Even if you calculated your loan amount and you paid 100% of that, there are two other what I call qualifiers that you have to do in order to make sure that you get 100% of forgiveness. And one of them relates to making sure the number of full-time equivalents you have during the measurement period and the ending period match, and or not going lower than what was the measurement period. Because let's pretend you had 10 at the beginning and 9 at the end, and that measurement period, either at the end of the 8-week or by the end of that 8-week period of your loan, you will lose that percentage. You'll lose 10% that will not be able to be forgiven, is one test. And then there's another test, and again, I don't want to get into the weeds, but there's a payroll dollar component that if your payroll has decreased by more than 25%, those dollars get added back. So there are some other tests in terms of loan forgiveness that you're going to have to understand down the road. I get it, people want to keep their people employed, but there are strategies. I won't call this tax planning, but there are strategies as you look to this once you get your money to make sure you're talking to people to help you kind of navigate through that.
Yeah, I had seen as well that you could get 90, you had to have at least 90% of your employees. So in your 10 to 9, you'd be okay. But if you were, 89 out of 100, versus 100, then you'd start to see a decrease in what was forgivable. But again, it's more guidance coming.
I think the wiggle room there is many employers have already furloughed or laid off staff. And even if you want to rehire them, but they've taken another job or moved and you cannot, it feels as though it'd be unfair for the SBA to say that, oh, you have to rehire everyone you laid off, because maybe that's not impossible for many, many reasons. So I think there should be some wiggle room there, and there probably will be more guidance. But the intent here is to hire everyone back at their existing salary or hourly rate.
I have something that's kind of an interesting question. Do we have to use PPP for payroll expenses in the 8-week period, or may they be from previous or future periods? I am imagining a timing issue if I pay my employees twice a month, for example. Does anyone want to take a shot at that one?
I guess I could take a shot at it. I certainly don't think it's for previous periods. Okay. I do think that goes back to sort of that wiggle room. I think the intention is you're paying people for work done during that 8-week period. If for some reason your payroll cycles are off that, you can make an adjustment, but they're going to want to see that you use the money during that 8-week period for payroll.
I think that's a fair answer, Joe. I don't have anything to add to it. That's sort of what, what's out there for us to go by at the moment.
Okay, great. Here's one. Any guidance for nonprofits, especially a church?
There is some guidance out there for nonprofits, especially churches. Religious organizations are eligible to apply. I'm not an expert on the church specifically. I know we've had several nonprofits who have applied that we've been able to assist or at least approve. Haven't funded yet, but expect to in the very near future.
I think the tricky part becomes what type of nonprofit you are, and if, like, for example, you're in the arts and you have venues and you have things going on that you probably won't be able to do for a while, you're going to apply for the loan and you're going to keep people on, but most likely because you're going to be in a situation where you're not going to be able to have performances for a period of time. If this plays out the way they're saying it's going to play out, you're going to end up with a loan. And the question to the organization is, does that debt make sense? At 1% for 2 years, it may be a good way to help rebuild it over a period of time. But there is some questions there that you'd have to really kind of pay attention to in terms of what's best for the organization when you know that you may not, quite frankly, be able to generate revenue for a period of time. And that's probably the biggest concern that I see with nonprofits.
Clearly, nonprofits are eligible. And in the FAQ update that came out yesterday that I think Rusty mentioned earlier, there was a very specific guidance on religious organizations. And I really do apologize. I did not commit that to memory, but I know that there's very specific guidance on religious organizations, which was a little curious for me to single out those type of entities. But whomever asked that question can follow up with me afterwards. I'm happy to talk to them about it. But there's some insight, or there is at least some issues that were raised that needed to be addressed by the SBA.
Yep.
You know, I have some questions here about the EIDL. Maybe we could put up the slides relating to those now for people to look at while we're talking about it. One is really kind of interesting, and let's start with this one. Can a business enroll in both the EIDL and the PPP program?
Yes, a business can enroll in the EIDL and the PPP program. However, if they apply for the $10,000 emergency funding EIDL, that money reduces their PPP by that $10,000 that they got. Otherwise, they can apply for both and use both.
Okay.
And then there's one question I had for Joe. There's language in the, I think it's the interim rules that says, if you already have an EIDL loan outstanding and you're using those funds for payroll, you can refinance those funds into the PPP. I don't mean to put you on the spot, but I'm not sure if you've seen that yet. But it's definitely an idea that the SBA had.
I've seen that in the interim rule. We haven't come across it yet. What we have found is most people who've applied for the EIDL hasn't gotten it yet. So if they originally applied and thought that they were going to use the money for PPP, they probably are better off not taking the EIDL if they get it, especially if they have a PPP already. They certainly can't.
Because the idea being the forgivable amount is likely greater in the PPP program than in the EIDL.
Correct.
Right. But if you used over and above the grant portion of the EIDL, say an additional $5,000 for payroll, it seems to me maybe there's a program to allow you for that extra $5,000 to be forgiven. I think it's kind of a, who knows?
I think it's definitely a who knows.
All right. Here's a question. What are the spending parameter differences between the EIDL and the PPP?
The PPP is really for payroll, utilities, rent payments or mortgage interest. It's much more restrictive, I think, than the EIDL, which is really meant to cover more things.
And that's if you want to be forgiven on the PPP.
Now,
those are the restrictions.
Someone did ask a question about, is workers' comp included in that calculation?
You know, that's interesting. We've been going back and forth in different parties. I don't see it clearly determined one way or the other. We've been advising our clients, you know, we're not sure if that number is a number that they're going to be including. So we've kind of taken a conservative approach, but I'm not so sure that I know or could tell you right now, because there's nothing in there that talks about specifically workers' compensation.
We've taken the same approach, exactly the same approach. When in doubt, don't include it, and you won't get in trouble.
Yeah, I think that's right.
I had that advice a long time ago about something else. Here's another one. All the focus so far has been PPP relief, but very little is known about the EIDL loans. We applied online, but I've heard nothing from the SBA. Please give as much detail as you can about how these are being administered, by whom and when.
That's a great question, and unfortunately, unless we had someone from the Treasury or maybe the SBA on, and I don't even know if they'd be able to give you an answer. It's a program that's directly tied to the Treasury. It's honestly been around for a long time, but it really is meant for physical injury disaster loans. This program that they've adapted to this was around for, like, if Hurricane Katrina, floods, things like that, where you have a disaster area, that people can come in and get a physical disaster loan from the federal government with long terms to repair businesses repair their homes. In some instances, it wasn't related only to businesses in the past. So they've tweaked it to fit this and made an economic injury a thing. And oddly enough, when most people started applying, it defaulted to the physical disaster, and they got kicked out, and then they had to go back and fix it to the economic disaster. But once you apply, it's all in the hands of the SBA and the Treasury, and we have nothing to do with it. No banks have anything to do with it. You just have to wait to hear back from them as to whether or not it gets done. It's quite possible that the reason PPP came about so fast is that the EIDL got overwhelmed so quickly, and they realized they couldn't possibly handle the volume.
I would also comment that the reality of it, it's in a big program, and those are hard to administer. Doing the PPP and working with the banks and relationships with customers and bankers and their accountants and their lawyers will make things go a lot smoother. And I think that unfortunately, for early on, it seemed like it was a quick way to do it. But we even had I know a woman who has a small business, and a week ago she applied for it and is yet to hear back from it. And so you sort of don't have a process other than wait around for a call, where the PPP, there's direct contact and you know how to go about doing it. So when we're advising clients, because we know early on that the economic loans were difficult, we say don't even apply for those, just apply directly to your PPP program, because that will probably allow you to get it quicker. Now, maybe something's changed, but that's sort of what our approach has been, and that's sort of what I hear out there.
Yeah, just to add a little more light, shed a little more light on what the SBA is doing or handling. We have a story today on our website on what bankers and business people have been dealing with these programs. And you put it in perspective, the SBA usually handles $21 billion in loans a year. And this is now what, 300 billion or something crazy like that? I mean,
Yeah.
they don't have the bandwidth to really handle it quickly. So that's
in 2 weeks.
That perspective.
Yeah.
Yeah.
In a pandemic.
Last I read, there were 37 banks that could issue PPP loans in the state of New Hampshire, and there's just one SBA.
Yeah.
So.
Right.
Well, also according to for the SBA, we have applied for the EIDL program and we're given a confirmation number. Is there any way to check on the status with this? I guess from your answer, Rusty, there isn't any, or just wait?
I'm not aware. Joe would know more than I would, but I'm not aware of any way of getting there.
Yeah, there's no person on the other end of the phone. You can apply to an SBA.gov email address, and they'll get back to you when they get back to you.
And one other thing about the about the EIDL, is there any difference between the grant program under EIDL and the loan program? I mean, what are the differences?
The first 10,000 is of a grant program for emergency funds. The rest of it is all a loan program. There's no forgivableness to it. It's up to 30-year terms and 3.5% interest rates for businesses and 2.5%, I believe, or 2.75 for nonprofits.
Great. This is an interesting one. I own a restaurant and I have laid off all staff and closed. My employees seem to have no interest in returning to work as they make more with their unemployment plus the $600 weekly additional. And I assume that means you can't even ask for, if you can't pay the employees, how can you get the PPP loans? I mean, I guess that's what that question's raising.
That is an interesting question. If your employees don't want to come back, you can't rehire them, so you wouldn't be eligible for the forgiveness.
You'd have to, if you could hire new employees, maybe that would be an option for you.
Yeah.
And I would say in that scenario, if you applied and were granted it, I'd stick all the money in the bank. If you couldn't get your employees in, I'd plan to just pay it off at the end if you couldn't use the funds.
And actually, I think that's a good point you bring up, Joe. And some of this, clients have asked the question, well, you know, what's the worst case scenario? And I go, well, if the worst case scenario that you think you may, you know, take advantage of this and you want to, and you're at the end, you don't have enough forgiveness and you just squirreled the money away, you just send the money back. And that, you know, in a way is some way to help, you know, kind of consider just the cash flow element as you go through your own cash flow analysis of what's going on and what may be coming up, knowing that, you know, I think of construction. I do a lot of work in the construction industry, and you know, if you're doing some of the jobs that you have X amount of days, and because of the weather, and you lose out those days, you don't get them back. And figuring out if you should be part of the program or not, and how best to utilize that program is difficult because your production is so limited. And although you may be having some money available to help, at the same regard, you do have people that won't want to work in those circumstances. So there's no right answer, and it does take a bit of an analysis of sort of where when you're going to ramp back up for work.
Okay, great.
That construction example is great because right now, as far as I know, DOT in New Hampshire still has green lights for all their projects. So if the construction company got the loan, then things changed and DOT said stop work. It's a change of circumstances that's so uncertain it's nearly impossible to plan for. But I agree, you just squirrel the money away and pay it back.
Becomes cheap insurance.
Yeah, that's right.
Interesting. Here's from a business advisor. I have assisted numerous clients and many have supplied successfully for the PPP loans. None have received a response from their bank in regard to an SBA approval. When Joe says the primary has approved loans, has received approval from the SBA, have they gotten money have they given out money for a loan yet? When will they disperse funds to businesses? Within 10 days? I guess I'm talking about their bank.
Two answers to that. When we communicate back to customers that they've been approved for an SBA loan, we have the SBA number. We've gone through the full process and gotten an SBA number so that there's no question whether or not the money's sort of been held for them at the SBA. And that goes to your second point of that 10 days. It was originally 5, and then 4 days in, we still didn't know what we could use to close these loans, which is I think why they went to 10. We got guidance yesterday from the SBA that what the notes look like with that sort of, more the interim final rule that Rusty talked about earlier said more detail, more guidance to follow. They've given us that on the notes. But with that said, we have begun to start to close these today. We'll be funding our first ones today, and we'll be funding everyone that got approved last Friday by next Monday, because that's the 10 days that we have.
Here's another one. Can Rusty give an example of how you calculated a sole proprietor or LLC owner's total income for 2019 to be used in the PPP payroll calculation? Can you add depreciation back to line 31 net profit? That's definitely a question for an accountant.
Boy, that is. It's I'm gonna have to say, unfortunately, there's not a lot of guidance about that specific kind of answer to it. I think that what it says when it actually says in the CARES Act is that it's net earnings from self-employment. And so when you think of net earnings, you think of all in expenses. And I don't know if depreciation gets added back or in creating a larger pool of it. But the reality is, no matter what that number is, if it's greater than 100,000, it's a moot point, because the max that you can have for that compensation for that individual is no more on an annual basis than $100,000. And that's probably the best answer that I can give you at 11:44 on 4/9. If in a question and answer from the SBA with combination through the Treasury have some more answers, I will be more than willing to revamp that answer, but that's the only one that I have, unless Mark or Joe know something that I don't, which they probably do.
No, I'd agree with that. The only caveat to that is that 100,000 cap is on wages. So you would still be able to add health insurance. You'd still be able to add benefits. You'd still be able to add your BET tax in the calculation, so you can get quote unquote above 100,000 in total comp to an employee. But from a wage standpoint specifically, it's 100,000.
Yeah, good point. No, that's all true.
It's just cash contributions, and that was just clarified yesterday afternoon.
All right, here's one from a seasonal employer. Any guidance for a seasonal business calculation? Our payroll is April through October.
Yeah,
What
the
is that?
SBA has said you can use seasonal payroll and just figure out the average during your in-season being this time period. So if you're a seasonal business and you're busy in September through January, you can't use your September through January for April time period. But if you're seasonal April through June, you can then use that period.
Okay, great. We have laid off employees and the rest have taken a 20% pay cut. We don't have the work to bring those laid off back, but do we have to or should we restore the rest to full pay to get, I guess, when applying for the loan?
If you want your loan to be forgiven, I think you have to bring those people back and get them back to full pay, or else you're not going to meet the guidelines of the forgivableness.
I agree.
Yeah, at least for that eight week period after funding.
Correct.
Great. Here's a question. Please explain how to calculate owner's total payroll for 2019. Have you covered this already? They're trying to figure out what the payroll is for 2019.
Is that question for the to calculate the average monthly payroll or just the owner's payroll? I'm not sure.
It's the owner's total payroll. I'm not quite sure what that is. Sorry to give you a question that I don't understand when I'm reading it, so I'm sorry.
So I think I can cover it. I mean, you aggregate the payroll costs from the previous 12 months, all you've paid, and sometimes though you just use whatever you did in 2019, and maybe you guys can tell me the differences between those two things. And then you subtract any compensation, cash contributions in excess of $100,000, and then you divide by 12, and that's your monthly payroll costs. Then you times that by 2.5%, and that's the maximum amount that you can get as part of the loan. It's kind of the simplistic way of saying it, but that's the way I look at it.
And I think that's on a general, if you're looking at a total all-in payroll, but if you're looking at an owner's pay and you're looking at it, it's the same way, except you did it on one individual, just if that's what they're asking. What Mark is saying is probably on when you're looking at a company in all speak, but you can take that same application and apply it to one owner or two owners, however it may be. You end up doing it the same way.
Yeah, I think the other thing that maybe they're getting at is if you didn't actually pay yourself, but you did distributions or draws or whatnot, that unfortunately you're gonna have to wait till the 10th to be eligible for, and then it's gonna be capped at the 100,000.
Okay, here's a good question, actually. Because 40% of the attendees have not applied, how about asking the panelists for advice about how to apply? This is for a PPP loan, I assume, but also EIDL. Just to ask, what from each of your perspectives, what should you have in mind if you're going to apply?
I think the first thing you do is should call your existing bank and find out if they're doing them. If they are, that's going to be your path of least resistance. And they'll tell you what they need. I think every bank's asking for slightly different things. But the easiest way that I sort of have been telling people is, number one, you got to get the SBA application signed. You can get it off the website. Most banks have their own application they want you to sign as well, just so they can cover that off from a Reg B standpoint. You're going to need your 2019 financials. If you have a tax return already, great. If not, internal something, you're going to need that because the SBA requires it, even though the Act doesn't, in order to get a number. And then lastly, you're going to need to tell us how you calculated your 2.5 times payroll, and then provide the backup. It's sort of like, we're back in high school, show your work. Tell us what your loan amount is that you think it is, and then show your work vis-a-vis, income statements or, you know, your health bill that you paid or your payroll provider has given you. You just have to prove how you got to that number, and that's what we'll be going on.
I think what Joe said exactly is right, that you first need to contact your bank. I've talked with many clients and they've all asked for something a little bit different just because of the process that they have within their own organization. I also think, you know, if you want to kind of look at the numbers to it, you know, we have a good calculator. There's probably other calculators out there. In the calculator, there's three tabs that kind of list sort of the use of the funds. Excuse me. The data that you need on a general basis and how to do the calculation. I don't think it hurts to do that because it sort of helps you kind of guide you through the process, but getting to your bank or also talking to whoever your CPA or advisor is another good part of it. And also in that discussion, you might want to make sure, you know, there are other programs out there. We haven't talked about the payroll tax deferral program. And if you're already in a program like that, you can't be in a program like this. So you want to know what the other programs may be in that discussion as well. So to make sure that you're in the right one, or that you're already in the wrong one, and ways to cure it if there are any. But that's sort of my take on it.
What is the payroll tax deferral program?
Well, that program is what it sounds like. In other words, for those organizations that are not going to apply for the PPP, there's a program that says on the amount of the employer Social Security, the 6.2%, between now and actually back, you know, I think it goes back to when the act came into force. Between now and in that period of time to the end of December 31st of 2020, you can exclude that payment to the IRS to save some cash. And some organizations, like a nonprofit, may look to that. You're not going to have a grant. It's not free money, but you're then allowed to pay up to 50%, at least 50% by the end of the calendar year 2021 on that deferral that you had for 2020. And the remaining 50%, or whatever number greater than 50 or less than 50% if you did more than in the first year, by the end of 2022.
And if you're in this program, you can apply for the PPP. Is that what you're saying?
Correct. That's correct. That's the guidance that we have that says you can only be one or the other. And so, you know, again, I'm not suggesting that's a great program, but having an understanding of all the different programs, there's so much information out there, but I think if you do have somebody you trust as an advisor and contacting them, it will help you as well. I mean, a lot of this is on the borrower. The bank isn't certifying this information. They're just processing the information and doing some testing on the payroll numbers. Joe, maybe I'm wrong if I'm assuming that, but you know, the certifications are all going to be provided by the borrower in this circumstance.
Yeah, we're expected to do some testing for sure to, you know, validate their numbers, but we are not certifying it. We are not expecting to do the deep dive that the client is doing.
And one last piece of advice for the folks who haven't yet applied. If you have a lending relationship, an existing lending relationship with the bank, more than likely you should go to them or that bank, because they're going to try and treat their existing customers and clients better, perhaps, than if you're brand new to them. And then anecdotally, I'm hearing that unlike the primary banks of the world, the very, very large institutional banks, the BOAs, the others, are probably going to be more difficult to work with. So if you can walk into a, you know, assuming primary bank's not open anymore, you can't walk in anymore, but assuming it's better to work with the smaller regional banks to get more attentive appreciation from them.
You can go through the drive-throughs at primary banks, just like most banks.
Can you throw your application in through the drive-through too, Joe?
Yeah, we actually have had people, funny story, we actually broke our drive-through. Someone was trying to put a file that was too big through the little portal, and we had to take it apart and file out and redo it. But yeah, you certainly can.
That's a heavy payroll file.
Oh yeah.
Here's a couple others that kind of get more specific. I own a real estate investment company and have tenants who can't pay rent. Do you recommend applying for EIDL to help me get through this period?
You are eligible for it.
Okay, very good.
The question of not paying rent is a huge question globally. I read an article where in Britain, commercial tenants pay quarterly, not monthly. And the last time rent was due on March 25th, only 30% of the retailers in Britain paid rent on a timely manner. I mean, it's going to be a huge issue for landlords in the future, commercial landlords. And generally, if you have a loan, right?
Yeah,
and generally, if you have a loan, you can't defer rent without getting the bank's permission or consent. So it's going to be, I'll go back to Joe and the bankers to see how they're going to create a market on what's reasonable for deferring rent.
Yeah, it's interesting because before PPP came out, that's all we were doing all day, every day, is dealing with people calling saying, I don't know if my tenant's going to be able to pay rent. What can you do? How can you help me? And we've been navigating through that. Then all of a sudden at the last minute, we switched to PPP, and we're hoping that that actually solves the other problem, that people who now get their paychecks will use their paychecks to pay their rent, and employers will use the 25% of that PPP to pay their rent, so that it trickles down to some degree.
Great. How about this? Any guidance for New Hampshire-based consultants who work overseas in places like Dubai and Saudi Arabia in the realm of the foreign earned income exclusion and no W-9?
I have no good news for those folks right now.
Agreed.
You have no good news? Like you're out of luck.
As far as I read it.
Yep.
Let me get this back here. Regarding that previous question I asked about when can you find out about your EIDL loan? I have one of the participants sent in, there is an email address I have used to communicate with the SBA, re my EIDL application. The address is Disaster Customer Service, all one word, Disaster Customer Service at sba.gov. They are slow to respond, but they have. Once again, that's Disaster Customer Service at sba.gov. Now let's go to a question that was submitted yesterday. Can you cover how a sole proprietorship can benefit from the stimulus package, more specifically an online business selling through Amazon and eBay?
I mean, I think the way we talked about this earlier is that their income, net earnings from self-employment at 250%, if it's not, again, below the 100,000, they'll be able to apply for it. Plus, and Mark hit this and Joe hit it, any benefits as well that are paid for health. They're no different than any other business. They're able to utilize that. And I think Joe also said starting tomorrow.
Right. The only caveat that I would add to that is businesses have to certify that they have had some sort of economic hardship from this. So if that online business is selling, hand sanitizer and
toilet paper,
and is not actually harmed, they wouldn't be eligible because they have to certify for that. But as long as if they've seen a decline in revenues, if they or some other, Amazon specifically has said we're prioritizing these certain things versus other things. So if they sell toys and it's going to be an extra 2 weeks for toys to get delivery, that's something that they would qualify for. But that's a caveat across the board for this program, is you have to actually have some loss or some economic hardship in order to be eligible.
Okay, I have this
I thank Joe for one more. This is important, Jeff, just because I'm glad Joe brought this up. I got to read this certification. Current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. There's absolutely no guidance on what the ongoing operations of the applicant means. And there's lots of uncertainty there that you're not undoubtedly committing fraud on the SBA, which there are penalties for that, big jail time and large fines. So you just have to kind of go on good faith. Like, everyone's kind of in an uncertain realm here anyway, right? So what is really uncertain? Does it mean I have a zero balance, or does it mean I had to furlough one person, but I can still get by, or does it mean I'm doing great? I want to take advantage of this 1% loan. You know, it's very difficult for a legal perspective to tell someone what ongoing operations of the applicant means. So.
Yeah, a great example, you know, it may be unique to New Hampshire, maybe not, but we had a gun shop that originally was doing great. You know, their numbers were up, everything was great. We all hear, you know, everyone wants to buy guns. And then one of their employees got sick and they had to close the entire shop because somebody got the disease. So now all of a sudden they went from, yeah, we're probably not eligible to you're absolutely eligible. So, you know, every case is unique, I think, and you just got to sort of navigate through that.
Very good.
Well, I think just that it's important, and just because we talked about construction in general, and we hit DOT and the outside contractors, but you know, I had a painting client that all their jobs were running and was like, I don't need this money, and all their jobs got shut down. And so, you know, time is going to dictate it, but I think you don't know. There's a lot of uncertainty that to that point.
And if you're a nonprofit and you have an event, say, scheduled for September, and you make all your money off of that one event, and you have no idea whether or not that event can go on, you're really in a difficult situation, because if it does go on, you may say, oh, there was no difficulty on my ongoing operations, but there's clearly uncertainty now. So that's the give and take.
All right, I'm gonna have that one more question. It was about the owner's compensation, and the questioner restated the question. An owner's compensation can be included in the payroll calculation for the PPP. How do you determine the owner's 2019 compensation? I know it can't be more than 100K. Is the owner's 2019 compensation just the quote net profit on line 31 of their Schedule C, or do you determine it another way?
Well, I know that what banks are asking for right now is draft copies of their Schedule C. So I'm not sure if that, you know, there are other ways, but typically that's a way of saying, is that your net income or your net self-employed income that you're going to report and pay tax on from the wage standpoint of it. And so I think that's all I know right now to go on. I don't really have a better answer to solve that.
Right, we generally have said use your W-2 income.
Anyway, before we actually have gone over a little bit. Before we run out of, we sign off. We had one more poll question to ask you if you're still out there, on basically how you're feeling about the economy. So, when do you think business will return to even a semblance of normal? And we'll give you some time to figure that one out, because that kind of put things in perspective right now. Anyway, while we're doing that, I want to thank our panelists, Joe Bader from Primary Bank, Rusty Mosca from Nathan Wexler, and Mark Bowden from Nixon Peabody. Been really helpful. And I know we have like a lot of questions here that haven't been answered, and I'm not quite sure how we're going to do this, but maybe we can, you might be open to receiving some questions from people if they're looking for some more advice. Is that possible with you guys?
Absolutely.
Sure.
Absolutely.
Great. Very good. I really appreciate it. Now, as a result, the result of the poll, 11% that things will return to normal by June or before. That's what I call an optimist. 46% by December, 10% say by December, and 33% said by 2021. That's quite a disparity there, but I mean, if I had to answer that question, I wouldn't even know what to say. So I admire the people who took to have the guts to say something. But anyway, I want to thank once again Joe Bader, Rusty Mosca, Mark Bowden, and our sponsors, Tufts Health Freedom Plan and Northeast Delta Dental, for helping us put on this really very valuable webinar. And guys, we really appreciate it, and thank you very, very much.
Thanks, happy to.
Yep.
Thanks,
My
Jeff.
pleasure. Thanks.
we